when it comes to Bangladesh. Yes, Mahima?
Right, Tamanna. So a lot of companies have a significant presence in Bangladesh. I'll break it down for the viewers sector-wise. From the FMCG pack, we have Marico, where 11% of the total revenue comes from Bangladesh and 44% of the total international revenue comes from Bangladesh. They've said that by FY27, this 44% will go down to 40%. Emami also has a wholly owned subsidiary in Bangladesh, and FY24 around 17,400 revenue. So 6% of the revenue for Emami comes from Bangladesh overall. For Asian Paints also, it has a wholly owned subsidiary where they have around 10 crore of revenue in FY24 that came from Bangladesh, 12 crore of royalty came from Bangladesh, and they have a 12 crore loan also from the Standard Chartered Bank of Bangladesh. Now Pidilite has two subsidiaries in Bangladesh. The first subsidiary, which is a specialty chemical limited, around 4.23% of the contribution in FY24 came from that particular subsidiary. Moving on, Jubilant Foodwork had recently completed full acquisition of Domino's in Bangladesh. They hold around 26 stores in Bangladesh overall. Godrej Consumer also has a wholly owned subsidiary in Bangladesh. Now VIP Industry, this is an interesting one where 30 to 35% of their capacity is sourced from Bangladesh. So this could be one of the company that could get impacted. Now a bunch of railway companies also have significant presence in Bangladesh. RITES has a contract supply of 200 broad gauge coaches, around 906 crore is the value. For Texmaco also, they export freight cars to Bangladesh. And for defense companies, Garden Reach total contract of $16.5 million was a contract that is there with Bangladesh. Now oil companies, a lot of oil companies like Indian Oil companies export sulfur. Telecom companies also has significant, Airtel also has significant presence, and Sun Pharma, and a power company like Adani Power's subsidiary has 100% of the power generated is sourced to Bangladesh. So all of these companies could see impact because of the crisis that Bangladesh is facing right now.
Thank you for that, Mahima. This is, of course, going to have a long-drawn impact in terms of trade. But remember, in terms of India's trading partners, Bangladesh is the top 25. It used to hold position number 4. Now it's 5. In FY24, the trade or the exports to Bangladesh have already declined 10% in the year behind us, but nevertheless significant and will have impact sentimentally, at least, on some of these companies that Mahima highlighted for us. Well, we're gearing up for trade, and it's going to be a morning where it'll be interesting to see whether new fresh longs come in, or of course it's going to be on the Nifty or stock specific. Rajat Bose, Sunny Agarwal both joining in with a technical and a fundamental view. Rajat, I'll start with you on the charts. After yesterday's big fall, today comes as no surprise where we should get a dead cat bounce in trade. If we do get a gap up of 200 points on the Nifty, intraday, do you think it's going to be 200-point gap up and then we build on those gains, or that would get sold into, in your opinion?
Yeah, I would say that there is a possibility of a gap up opening, and then we need to see how things pan out. But the fact that the VIX rose by 42.23% in a single trading session, even on June 4, it went up by only 27%. So this is the VIX rising in such a manner is definitely something to worry about. But if you are talking about a dead cat bounce, then I would say yes, because the place where this whole crisis originated, I'm not talking about Bangladesh, that maybe a stock-specific impact will happen. But if you look at the two key indices today as they are trading now, that is Nikkei and Hang Seng. Nikkei has given a bounce, but the problem is that in Nikkei there is a death cross. When I say death cross, it means the gradients of the two moving averages are sharply down, and the shorter term 20-day moving average is piercing the 50-day moving average there. So even if you see a bounce there, even there it would fall. And the S&P 500 also did not show much of, it is almost trying to test its 200 exponential moving average. And since we are highly linked with all these through the FIIs putting in money here, so as you said, a dead cat bounce can happen, and at higher levels you can expect some selling. And what used to happen earlier, that may not be the case this time. That is, one day fall and immediately a rise, that may not happen. This fall may continue after a dead cat bounce. And the three levels to watch out for will be 23,900, 24,000 to about 23,900 will be a very important level. After that, it can slide down. If that gets taken out, then there could be a fall to something like 23,800, and thereafter 23,500 will be a major support area. Regarding the Bank Nifty, yes, Bank Nifty is not as much weak as the Nifty, but even Bank Nifty has got some problem in the sense that it needs to take out 50,100 mark. If that level is taken out decisively, thereafter there will be another level to watch out for, and that would be a major key resistance level. Now earlier that was a support, that is 50,400. If 50,400 can be taken out by the Bank Nifty, then you will see that the Bank Nifty is